All right, we can start. Let me start with introducing Lakshmi Madam. Am I audible? Hello?
Yes, sir.
Yes. Okay. So, welcome to our SMS. And today we are going to discuss on section 38. And with us, we have CA Lakshmi GK. She is a graduate from VVN 2009 from Bangalore, qualified in the year 2012. She is practicing in indirect taxes since 2012. Currently, she is associated with RKTR. She has an experience in compliance, consultancy, drafting replies, representation before various authorities, including SESTAT. She has been a member of our faculty group and actively presented various topics on GST at Hiragange Academy, NASIN, FKCCI, KSCA, and ICI. With this brief introduction, I would request Lakshmi Madam to start today's discussion on section 38.
Thank you, sir. Thank you so much for the introduction. I hope the PPT is visible.
Yes, madam.
Yes. There is some issue with my video. Can I turn off the video and continue, sir?
Yes, madam. Yes, madam.
Thank you. We're going to discuss in section 38 of the CGST Act. I would like to add that members can add whatever the points they want to add, whatever the stage. So I'll be going ahead with what was initially section 38 was there, and what are the amendments made to section 38, and what are all still yet to be notified by the government. And I would like to take till the point the IMS has been introduced. With this background, I'll just continue section 38. This was the initial process of filing of the returns, as everybody may be aware of it. The GST was introduced. They said there will be 2 statements and 1 return filing, that is GSTR 1, 2, and 3. And in between, there was a process of GSTR 2A and 1A. That is, let me explain. GSTR 1, where the supplier was supposed to file his all supplies details in the GSTR 1 statement, and that was communicated in auto-populated statement to the recipient, and the recipient was supposed to verify the data which is there in the GSTR 2A, and they had given an option to the recipient to accept whatever is flowing in GSTR 2A or reject, or there was an option to modify, and also there was an option to keep it pending. And if any supplier has not uploaded their invoices, there was an option to add it in GSTR 2A and file GSTR 2. So once the GSTR 2 was filed, then whatever the modifications, changes, or additions made by the recipient was sent back or given as an auto-populated statement in GSTR 1A to the supplier. And based on these details, GSTR 3 used to be auto-filled. The option was like it will get auto-filled from the GSTR 1 and 2. And only the payment related aspects were supposed to be taken care when GSTR 3 to be filed. So this was the initial process which was provided in the law, and the same I have given in a steps wise. So here if we can see, initially when they introduced whatever the 1, 2, 3 concept was there. So 1 was hold on, and instead of 2 and 3, they gave a GSTR 3B monthly return filing with payment of taxes. So then later on they introduced GSTR 2A, and now we are in a position of where the GSTR 2B, and now it is converting into IMS. Okay, what changes happened? If we recall, during the 31st council meeting, they said there will be a new set of forms which will be introduced, and new set of forms wherein the returns is required to be filed. But it was merely discussed, but it never enforced. Later on in February 2019, GSTR 2A came into picture, and with effect from October 2019, Rules 36 was amended, wherein they said whatever is available in GSTR 2A, to that extent only input tax credit can be availed, and over and above 20% can be availed, which is not even appearing into A, but still we can take a 20% extra. That was reduced to 10%, 5%, and later on it was omitted. So if we can see August 20, the GSTR 2B form data in GSTR 2B was introduced. So what's the difference between GSTR 2A and 2B? So 2A is a real-time basis. If the returns are filed by the supplier even after the due date, the ITC, those invoice details were appearing in GSTR 2A. But when it comes to the GSTR 2B, there is a cutoff date. For example, for filing a GSTR 1, the due date is 11th of the subsequent month. Means if the suppliers have filed returns by 11th, then only those details are appearing in GSTR 2B. If it is filed after the due date, then it is moving towards the subsequent month GSTR 2B. So again, if we see in Jan 2022, a new condition was also inserted in section 16 to section 16 subsection 2 clause A, wherein they said the details of the invoices should be appearing in auto-populated statement to avail the ITC. So it made it mandatory that ITC can be availed only on those invoices which are appearing in GSTR 2B. And also in the budget 22, they accordingly changed the applicable sections. If we see initially, the ITC availed by the recipient was a provisional as per section 41, because it used to undergo the process of section 42 and 43. That's the matching concept was there. So as there is no matching concept or two-way communication between the supplier and recipient presently, so they modified by revamping section 41. So the provisional ITC reference has been removed and it is actual ITC. And also 42, 43 and 43A has been eliminated or omitted from the act. And also there are changes made in section 38 with respect to the ITC communication through GSTR 2B. So these are all the changes which have been made before amending section 38. Yes, if we can see in budget 2025, section 38 again has been amended, wherein auto-generated expression has been omitted and it is merely become a statement. And also there is a conditions provided in section 38. And one of the condition, there are many restrictions also to avail the ITC, which we will discuss later on. And IMS also, I'll just skip because we will discuss in subsequent slides. So if we can see the section 38, the basis for amendment or IMS introduction, the 43 GST Council also discussed many of the aspects which are related to the input tax credit and how to streamline the ITC. So the statement of GSTR 2B had taken a basis from there itself, and also 47th Council also there are discussion, and even 55th Council meeting also they had discussed a lot on ITC availment based on the GSTR 2B. So what would be the intention? So if we can see, as there are so many conditions or restrictions or statements where we have to take the ITC, so the intention is wherever the supplier is tax compliant, and if he is uploading his invoices properly in the e-invoice portal, and that will be subsequently filed in GSTR1 statement. If this aspect is taken care by the supplier properly, all other steps will be automatically generated by the system. So it is system driven now. So no need to add or do any other modifications. So once the supplier does his job properly when he is filing GSTR1, so those invoices automatically will come in GSTR 2B or IMS, and from there the recipient can take the actions, whatever the actions available in the IMS, and he can file his GSTR 3B. So if we can see from the starting to ending, everything is depending on the supplier filing GSTR1 properly. If supplier is proper, I think there will be no harm, or there is no element to the recipient for reversal of the ITC, and there will be no restriction if the supplier is doing it properly. So the full intention, if we see from the initial to the end, basically the supplier should report his supplies properly in his GSTR 1. So I'm just directly going to the section 38. I have just taken the act as it is. So if we can see here, just okay. One minute.
So now this is referring to 2A or 2B or IMS, madam, 38.1.
So 1 minute, I'm unable to press. Are you able to see the PPT, sir?
Yes, yes.
Okay. Okay. Yes. Okay. Coming back to your question, sir. Here again, they are not telling it is 2A, 2B or IMS. They have changed it to a statement. So statement is presently the GSTR 2B, which is given in the portal, and also converting into the IMS. If we can see the details, so what they're telling in section 38.1, the details of outward supplies furnished by the registered person under subsection 1 of section 37 and of such other supplies as may be prescribed, and a statement containing the details of ITC shall be made available electronically to the recipient. So now, initially it was a auto-generated statement was the words which was used in section 38, and in Finance Act 2025, the auto-generated words have been removed, and they are merely kept the word statement. So even the invoice management system, that is the IMS is the statement which they are referring in section 38 now, sir. Sir, you want to add anything? Okay, we'll continue. If we, as we read the section 38.1, so it is a statement which will be provided electronically to the recipients, and wherein all the supplies or the outward supplies furnished by the registered person under section 31 will be auto-populated, and along with other supplies which may be prescribed in future. And how it will be auto-populated? If we see such supplies means whatever the a registered person has uploaded in GSTR1, and the form and manner also will be provided, and the time limit and subject to condition and restrictions has may be prescribed. So there are conditions as well as restrictions for availment of input tax credit. Okay. Next is the section 38 subsection 2. The statement referred in subsection 1, whatever the statement which is they are going to provide electronically, there are two parts in the statement as per the section 38. One is the statement where ITC is available to the recipient, and another is a statement where they are going to give the input tax credit which are not eligible or cannot be availed by the recipient wholly or partly. So there are certain supplies in respect of which the recipient will not be able to avail the full input tax credit or partial input tax credit that are provided subsequently. And also including, the word including has been added in Finance Act 2025, wherein it states even though it is appearing in a statement provided electronically, in even those cases where the details have been uploaded by the service where the details have been uploaded by the registered person, and it is appearing electronically in the IMS or the GSTR 2B, even then the recipient may not be able to avail the ITC in certain conditions. This including word may be added to cover the situations where the registered person has filed his return beyond the time limit prescribed under section 16 subsection 4, because nowhere in the subsequent condition this is included. And also it's already in GSTI 2B, it is stating that it is ineligible whenever the place of supply is not matching with the location of the recipient. So this kind of circumstances may be covered to add the word including, because it is appearing in your statement but still you are unable to take because of other conditions and restrictions. And also if we can see, section 38 subsection 2 clause B has certain other restrictions towards which the ITC is not eligible to the recipient. These restrictions have been made part of section 38, but it is not yet effective because respective rules have not been formed. Because every condition, if we read it, it clearly states that there should be some prescription to be given in the notification or by way of adding a rule or a condition in the CGST rules. So here what I have taken is, I've just taken each and every 1 minute. So all the conditions provided under section 38(2) clause B, like Roman number 1, 2, 2, 6, there are 6 conditions in which even though the input tax credit is available in statement or GSTR 2B, even then the recipient will not be able to avail the ITC on such input tax, on such invoices. Let us see each and every condition one by one, but this is not yet made effective. Anybody wants to add anything till now?
I just wanted to add one thing. Good morning to all.
Good morning.
That place of supply, even if it is different, it is not automatically showing as ineligible credit in your 2A 2B. And at
But
times that, sorry?
yes.
Yeah,
Sorry
so
to
that
interrupt.
also we need to take into consideration because that is not automatically showing as your ineligible credit.
Okay, but if we see the GSTR 2B, which we download from the portal, in the place ITC eligibility, it is giving a remark that your place of supply is not equivalent to the location of the recipient.
I agree. But if we see the earlier period, because of the
Okay.
clarification on 12(8), so
Yes.
that has become an eligible credit. So we
Okay.
have to be very cautious when we are deciding whether it is eligible or not eligible for the previous period as well as for the same period also, so that the correction can be made in case there is some mismatch because of some human error.
Okay, fine. Got it. Thank you.
Thank you.
One
Yes.
more three.
Yes, sir.
See, the deletion of the word auto-populated. What is the indication? Can the government amend the detail furnished by a taxable person? The supplier sending the details in GSTR 1. Now, that auto-populated is omitted in subsection 1. Does it mean the government can change or they can restrict some of the items that are appearing in GSTR 2A or 2B application?
Yes, sir. Sir, if we see the condition provided under 38(2)(b) onwards, these conditions, they are prescribed wherein government has to come into picture and then they have to restrict the ITC. We cannot identify these things. So I'll just discuss all the points one by one. So if we see all the condition here, this recipient will not come to know anything about the supplier situation, whether he has paid the full taxes in GST or 3B or not, will not be able to know it. He has filed 1 or 3B, to that extent only the recipient can verify. But if we see the further conditions, there are certain conditions where which will be available, the data will be available only with the portal or the government, not with the recipient. So government will come up with a certain other elements in the portal wherein they are trying to restrict the input tax credit in certain situations, which we are going to discuss now. Okay. So I've just borrowed few of the slides from the Venu sir PPT, and I'm just trying to explain all the condition. But again, I'm informing that all these have not been brought into effect. This is merely there in the section 38, and it may come or they can bring it out anytime in future. So here in this example, we are just trying to analyze. There is a person where is the ITC available with him is at 20,30,800 after doing all the matching concepts which are required to be done till the time of GSTR 2B. So now the section 38 has been introduced. So wherein this is a situation where can I take the full ITC? As per as yes, but there are certain conditions. Now coming back to the first condition. First condition is some vendors are newly registered. So what is the first condition? If we see the first condition in 38 2B1, so it states that by any registered person within such period of taking registration has may be prescribed. So they have kept a provision. If any of the supplier is a newly registered fellow, and for some period they may impose it if you purchase from a supplier who is newly registered, for example initial 30 days of the time. So if I buy from him, and even though it is appearing in my GST or 2B or auto populated statement, even then the ITC may be restricted as per Roman number 1 of the section 38(2). So one more checklist has to be added. We have to see who are all the vendors who are newly registered. If they are newly registered and the prescribed period, it should be prescribed by the government. So once the rules forms towards this, so we will not be able to avail the ITC to that extent. So next condition is default in payment of taxes by the supplier. So what happens if there is a default by the supplier? For example, it's in our GSTR 2B or IMS statement, but vendor has not filed his GSTR 3B. So if the 3B is not filed by the supplier, then again, I'll not be able to avail the ITC to that extent, and ITC is restricted. So next, one more condition is liability is 1. Whatever the invoices uploaded by the supplier in GSTR 1 and the tax liability is in the GSTR 1 is much more than the tax liability paid in GSTR 3B, then again there will be a condition of restriction. So here also they are going to prescribe a percentage. As per if we see the section 38(2), they are going to prescribe a percentage if it exceeds, if the difference between 1 and 3B exceeds that percentage, then ITC from such suppliers will be restricted in the hands of the recipient. So supplier has to file his GST 1 and 3B properly. If there is any kind of mistakes by the supplier, or if he does not follow all the conditions applicable for him, then the input tax credit to the recipient is going to be restricted. So this is also one of the condition. So next condition is 2B value is lesser than 3B. So here this is not going to be a recipient who can verify this fact. So these facts are going to be verified by the system, and this may be indicated in the IMS or the GSTR 2B, and it will be added in the ITC ineligible column once it is introduced. If we see, if the supplier has taken the input tax credit in 3B, which is much more than that of the GSTR 3B for a certain period of time. So they're going to mention the period of time. So, and if it is exceeded during that relevant period, then the input tax credit for the recipient is going to be restricted. So this is also one of the condition in section 38(2). So another condition is default in tax payment. If there is any default by the supplier or the vendor, that means he has received some notices and he is defaulted the tax payment for a certain continuous period of 3 months or 6 months, and he has not paid his taxes, then again the restriction of input tax will be applicable on the recipient if he has purchased goods or services from such type of vendors. So now one more condition is more payment of taxes in 3B by ITC and not cash. This is actually a condition where the 49(12) section 49 subsection 12 prescribes a condition in certain category of the registered person wherein at least 1% they have to pay the taxes through cash and they cannot avail the ITC even though it is available in his electronic credit ledger. If this condition is not fulfilled by the supplier, then again the recipient will be restricted to avail the ITC to that extent. So if we see all these conditions wherever we are discussing now, these are all the condition imposed on the supplier. So if supplier is not fulfilling any of one of the condition, or if he is not following all the sections or rules which are applicable to him, then the recipient is going to suffer because for him the ITC is going to be restricted. So also they have kept one clause wherein the clause of prescribed person can be notified by the government. So till then they specifically provided conditions or restrictions where the recipient will not be eligible or his ITC will be restricted. And also they have kept one restrict clause wherein they can come up and tell that these type of class of persons are there. If you purchase any goods or services from this type of persons or class of persons, then input tax credit will be restricted to the recipient. So if all the conditions are met, then we can avail the ITC.
Madam, can we just go over each of the condition once again, please?
Yes, sir. Just taken the act itself. So the first condition is by a registered person within such period of time of taking registration as may be prescribed. So this as may be prescribed is not yet come up. So what we can understand is that if any person takes a new registration, so there is a possibility that if we can buy a goods from him for certain period, ITC may be restricted. So this is the first condition, sir. Anybody want to add anything on the first condition?
Earlier, we had a similar thing in excise, right?
Excise, I won't remember, sir, actually.
What could be the reason for this particular condition? Any idea? Why do they
Bogus
restrict?
registration maybe, sir. If any person wants to take a registration and if he closes within 1 or 2, 3 months after raising the invoices, maybe to curb that kind of registration, this condition might have been imposed.
Probably I would have I come to know only after purchasing from him. Actual movement of goods, everything would have been there. I can establish
Yes.
movement of goods with documentary evidences. But does it not, as Unisa rightly pointed out, does it not amount to manifestly arbitrary in terms of Article 14? If the government prohibits me a genuine transaction from a newly registered vendor, then the buyer recipient is, put in an injustice.
I agree with you, sir, but this is the restrictions which they have imposed. But when we see the section 155, also burden of proof is given by us because we have already provided the details. It is a genuine purchase. But even then, this condition has imposed. We can challenge this condition, but initial period or those who cannot challenge this, they have to follow it, and ITC to certain extent may not be ineligible. And also if we see, it's merely restricting, but also they are not providing when can I re-avail it, or when I'll be actually eligible to take the ITC. They said initial 30 months, 30 days, we'll take an example. So if I've taken a registration today and next 30 days, who are purchases goods from me, they may not be able to avail the ITC. But after 30 days, can I avail it? So I think these rules and conditions need to be prescribed by the government in rules. Then only we can see how it will impact on the recipient.
Okay.
Next condition is default in payment of tax, where such default has continued for such period as may be prescribed. So again, if we see the link, like if we see the section 29 also for cancellation of registration, they have given like 6 consecutive months if you are not filing your return, or if you are going for a quarterly return, 3 quarters returns have not been filed. In such circumstances, they can cancel the registration suo motu and issue a notice to the registered person. If we link this condition to that, so here also there may be, they have to anyways prescribe the period. If the prescribed period is again 6 months, if the registered person has not paid the taxes for 6 months continuously, if we have purchased any goods from him, so again the ITC will be restricted. Here all one of the thing which we need to understand here, whether if the purchases are made between that 6 months is only restricted, or the purchases made earlier also will be restricted. So that point also need to be verified when the rules are made. Anybody wants to add anything on this condition? Okay, I'll go further. So
Yeah.
the third, yes, sir.
Let's proceed. So now the default which we are talking,
Hmm.
how do we
Think it can be quantified? Because if it is 100 rupees, I paid 98 rupees, the 2 rupees default.
Hmm.
How can that be quantified and restricted? Any thoughts, madam?
Sir, I think that scenario will not covered under 2. I think that will get covered under 3. Your scenario. I think scenario 2 will get covered when he has not at all paid the taxes entirely. 100 rupees also he has not paid, or he has not filed his GSTR 3B. So that
Okay.
scenario will be covered in the 2. But here also there is a problem, sir. If he has filed a nil return, assume.
Right.
Later on, he would have paid the taxes in DRC 03, or some other notices would have been issued on the supplier also, and there he would have settled it by paying a taxes in DRC 03. So that we will not come to know. So we have to see how the government will come up to verify all these factors.
Yeah.
And whatever the scenario you gave, sir, that is covered in 3. So if
Okay.
we see
Yeah.
whatever the taxes paid by the registered person, which is lesser than the tax payable disclosed in GSTR 1. So for example, if you have shown in GSTR 100 rupees and paid only 98 rupees, so there is a shortage of 2 rupees. And if it comes under the prescribed percentage, then again the recipients will be restricted to the ITC. And here also they may come up to the percentage, whatever the difference he has not paid, to that percentage only ITC will be restricted, or full ITC will be restricted. How the mechanism will be introduced by the government, which we need to see, sir. Because
Lakshmi madam, one question. See,
Yes, sir.
how does the legislature and the government think these provisions will at least prohibit fake ITC? Because this will only hit the genuine dealers. If I really want to do a pass on fake ITC, I will create a firm, establish its credentials by filing a nil small 3B, 100 rupees, 200 rupees for 6 months, so that my bona fides gets established literally on paper. Then I will
Yes.
execute, say, 100 crores worth of fake ITC and move on in the next month. But whereas I'm a regular dealer, I am actually affecting supplies, genuine supplies, and I get hit by 38. So what is the check that a system or the law can place where a regular dealer or a fake dealer can actually survive all these provisions despite how arbitrary it is, simply by filing 3Bs with a limited amount of data and it's technically correct?
Yes. So if we can see the intention from the initial to till date, whatever the changes which are being done in 1 or 2A, 2B or 3B, so they want the supplier to be proper. If the supplier is proper and is following the proper e-invoicing and that has been filed in GSTR1, there is no problem. So if we see the GST Council meetings also, they are mainly focusing on the supplier. So they want the supplier to be tax compliant so that the recipient will not have any kind of restrictions on ITC, or even the government will not lose any revenue. So all these restrictions they are imposing on the recipient. So to create a indirect pressure on the supplier to follow all the conditions. And here, to be frank, as you rightly said, the person who wants to issue a bogus invoice, he'll come up with any other plan. But actually, the sufferers are the properly filing return filers only. So these conditions are there, but this is not yet implemented. If it gets implemented, then actual burden is on the recipient, to be frank. Even though they want the supplier to follow everything, if the supplier does any one mistake, then the recipient is the person who is going to pay for that mistake of the supplier. He has to pay twice because he would have paid to the supplier as well, and he is going to restrict his input tax credit. So it will become a double time burden on the recipient, which is actually, if we see the legal judgments up to the Supreme Court level also, so it is already held that if the supplier does any error, so that cannot be the basis for restricting the ITC to the recipient. As we have seen Suncraft also, or some other. Sir, you want to add anything, sir? Venu, sir?
So, madam, this Suncraft judgment and other judgments were
Mhm.
prior to amendment of section 38 or implementation.
Yes,
So
sir.
when there are exclusive conditions coming in,
Mhm.
now can we override the provisions which are specifically given in the Act? Will those judgments hold good after the implementation of 38?
If we challenge the conditions provided in section 38, and if it is held unconstitutional, then it will hold good, sir, or else it is little difficult. Because as we have already seen the adverse decisions also, some few of the high courts, where they said 16(2)(c) condition is held to be valid. So, and if we are unable to prove the taxes paid by the supplier, then actually recipient is not eligible to ITC. So these views have been taken by few of the courts in different high courts. So when they can hold this as a valid, so there may be a chances that even this can be hold good against the recipient. So two ways also is possible, sir. Again, it has to go up to Supreme Court, and then only it has to be decided whether it is possible or not possible. So challenging is important.
Okay, madam, please proceed.
Yes. Okay. By any registered person who, during such period as may be prescribed, has availed credit of input tax of an amount that exceeds the credit that can be availed by him in accordance with clause A by such time as may be prescribed. So here it is a 2A versus 3B versus 2B, sir. So if we can see, if the registered person has taken the input tax credit in his 3B, which exceeding the credit actually available in GST at 2B, then again the ITC of for the recipient may be restricted. And here if we read, so the law is going to provide the percentage. If it is like 5%, what we read in the 36(4) rule, that is 20%, 10%, and 5%, similar kind of percentage here also they may require to give. And if it exceeds that percentage, then the recipient will not be eligible to take the input tax credit, or ITC will be restricted. So whatever
Ma'am,
is...
quick question here.
Yes,
What
sir.
is the relevance of this percentage when we are talking about invoice-wise linkage?
Yes, sir. If we see, there will not be any relevance because 38 was amended in 2022. Okay. And now, if we see in a 2025, IMS has been introduced, and once the 2B is there, invoices are there, then only I need to take the credit. So this condition will not have any relevance unless until if there are suppliers where they have modified the figures. For example, in 2B there is 100 rupees, and if I have taken 110 rupees or 115 rupees in my 3B, then this situation will come. As of now, it is not.
I didn't get that example. Can you just please repeat once again?
Sir, here, as you said, this condition is not applicable if we are taking the ITC as per 2B. But as of now, table 4 is not freezed. So the supplier can amend the table 4 of the GSTR 3B. So even though the ITC is auto-populated from the GSTR 2B or from the IMS to 2B, 2B to 3B, so the supplier can modify it. So because of the modification allowed in the hands of the supplier, this condition may be applicable. Once they freeze the table 4, this condition will not be applicable at all. I'll just give an example. If we see the table 3 from the July 25 return, they are stating that table 3 will be freezed. That means whatever we have shown in GSTR1, that will get freezed in 3B table 3. Okay, then I'll not be able to do any changes. If any changes has to be done, then I have to do it in the next month GSTR1. Similarly, if they freeze the input tax credit in table 4 based on the IMS report, then this condition will not be applicable at all. Even though if it is there, so ITC cannot be restricted because nobody will take the ITC which is much more than GSTR 2B. If that freezing is not happened, and if it is allowing the supplier to modify the input tax credit auto-populated in table 4 of the 3B, then this condition will hold good, sir. Sir, you want to add anything?
No, madam.
Any registered person who has defaulted in discharging his tax liability in accordance with the provision of subsection 12 of section 49, subject to such condition and restrictions as may be prescribed. This is a condition where the clause of registered persons where their turnover for month is exceeding 50 lakh, then for them the restrictions has been imposed that they have to pay at least 1% of the taxes in cash. If this condition is not fulfilled by the supplier, then ITC for the recipient will be restricted.
All these are going to be, once it is implemented, shown on a line item by line item on my 2B or the IMS, right? That this provision for this invoice is violated and hence you are not entitled to this ITC, correct?
Yes, yes.
So how will the portal know what my partner's ITR is greater than 1 lakh in the last 2 years?
So system will have the data, no, sir?
No,
GST
because
portal will have the data.
partner's ITR data of last 2 years are never uploaded in the GST portal. I
Correct.
am the firm. Two of my partners have paid more than 1 lakh. I have been consistently
Okay.
using 100% ITC, and
Got it.
that is flagged. Okay, I have 100% utilized. It is within data of the GSTN portal. But how does it track on a live basis? What is the 86B conditions of my supplier who could have always excluded the condition of 4912 and 86B through the other means?
Understood, sir. In this situation, I think if any audit or investigation has happened, then the proper officer has to give a link, I feel. Means this is also assumption, sir, because even I don't know how they are going to do it. So if the system is unable to generate anything or system is unable to identify, then there may be a provision given to the proper officer if he has done any audit of the supplier and where he finds that the supplier has not fulfilled this condition, he can give any kind of comment in the command in the system. Then this may be appearing in IMS, or else it is difficult, sir.
So 38 at the time of generation I would have satisfied the condition, but subsequent post audit of the supplier, the auditor says for the last 5 years he has violated. Then would the static data that was available to me change the character and say it was ineligible in the first place?
No idea, sir, how they are going to do it, or else it may not happen in IMS. They may issue a notice, I feel, because IMS it is difficult because it is, as you rightly said, all the condition has been satisfied. It is in the IMS, and I have also taken the ITC and I utilized it, and that period is also over by the time the proper officer would have identified this kind of issue. So I need to see when the scenario comes, how it will be appearing in IMS. No
Also,
idea,
one more
sir.
doubt. If the violation of 86B is there,
Mhm.
would all the invoices of the persons become tainted because of the violation, and entire ITC for every recipient gets challenged, or only to the extent of 1% from all the recipients put together?
Sir, if you ask me, I'll tell 1% has to be restricted from all the recipients of that supplier. They cannot simply restrict the entire ITC of all the recipients.
This is Jigar here.
Yes.
With respect to the current discussion, like if we are saying, or like if it's a proposed that if we are saying that the 1% from all the pool of the data is likely to be get restricted, but there is no mechanism currently available in the portal
Yes.
vis-a-vis the accounting as well, wherein we would be actually doing qua 99 and 1 splitting of that transaction when the utilization is being made. So that also would be a challenge, I guess.
Yes, sir.
Because we are generally what we are doing, like there's a pool of rupees 100 on which we are saying 99 is utilized and 1 rupees is still continued to be a part of current asset even in the books of accounts qua electronic credit ledger as well. So execution to the extent of 1% would be qua pool or qua supplier. That would be very challenging. That's what I understand from the current discussion.
Okay. Actually, it is very challenging, sir. But plus, we have to see the condition restrictions which are going to be prescribed when they want to implement all these conditions. So, till the time they are not prescribing any conditions or restrictions by way of rules, I think this will not come into picture, or it may go as it is also because IMS has been introduced now. So, we have to see only when the rules have been formed, actually how it is going to affect the recipient. So, till now, these are. Yes, sir.
Ma'am, since we are covering 38 and I joined a little bit late by 9:20, whether the question of what is the effective date of 2B,
Sir,
by which the provision of the statute says that credit has to be availed through 2B.
Yes.
So what is your view that previously from 1st of January 2022, there was 16(2)AA,
Yes.
which only required that the supplier should have filed the GSTR1 and communicate details under section 37.
Yes.
And post that, from 1st of October 2022, 16(2)BA was inserted that the credit has to be not eligible. As per section 38, it should not be not eligible, but it has to be eligible. And section 38 was inserted from 1st of October 2022. And more importantly, section 37(1), it was also amended from 1st of October 2022, wherein they said that the details as per GSTR1 shall, subject to such conditions and restrictions within such time and in such manner as may prescribe, be communicated to the recipient of the said supply. So the restriction of communicating the details to the supplier only up to 30, only for the GSTR1 which have been filed up to 13th, was put in section 37 only from 1st of October 2022. Prior to that, there was no restriction of what is happening as of now. If my supplier does not file up to 11th for monthly filer, that details are not communicated to me under section 38. Those details are only communicated to me in the next month to me. So therefore, the restriction of communicating for GSTR1 filed beyond a particular date was only of 1st of October 2022. So in my opinion, the circular which states, there is a refund circular of July 2023 which states that credit is only to be availed basis on 2B from 1st of January 2022. it is somewhere going beyond the law. And in my opinion, GSTR 2B is only effective from 1st of October 2022, not prior to that, because many of the platforms and many of the sessions which we are attending, and the view which is coming from the department, it is that 2B is applicable from 1st of January 2022. So this is on this point, I would like to have your views and the views of the House, because Section 38 is the enabling provision for 2B, I guess. And if we go to the GST Council meetings also for May 2021, they said that the enabling provisions are 2B are now being inserted by Section 38. And secondly, the one point which Unniji has raised, that if my 2B is not communicating these details, can the officer subsequently ask me that you have not complied with the provision? In my opinion, since Section 38(2) provide that now it is the onus on the department, and the Section 38(2) uses the word shall consist of. So if the statement is not consisting of, once it is prescribed, then the officer cannot invoke and say that you have gone beyond the provision, because now it is upon the government to provide me the details, and if I do not comply with, then I am responsible. If your portal itself is defective and not communicating me, then it is the violation of Section 38(2) by the portal or the department, for which I cannot be held liable.
Agreed. Sir, I agree with you for all the 2 points. As you said, it is even though from January 2022, the Section 16 subsection 2 AA was introduced. So during that period, everybody was following GSTR 2A basically, and 3B was followed from October 22 onwards only, sir. So I'll agree with you that condition. And if it is informed, or if any notice is issued by stating that if it is applicable from the Jan 22, so that can be challenged. Whatever the point you said, I'll agree with you.
And
And
Adding one more thing here.
Yes.
Yeah, I agree that 2A was inserted only on 22 Jan. But if you remember, the circular 123, the cutoff
Yes.
date of 11th was issued through circular way back in 19, the moment the 36.4 was brought in. They said you
Yes.
calculate 36.4 taking into account only 2A data for those invoices where the one filing is available to you in the 2A itself as 11th.
But Uniji, if we go through Rule 36(4),
Hmm.
that also did not provide it that it has to be filed by the cutoff date. The concept of cutoff date was brought only by the way of circular.
Correct, I agree.
Rule
But
36(4).
that circular is being relied upon by the proper officer, stating that it is binding on him, and this
Yes.
is the way he'll calculate.
Yes, and just like 16(2)(c), which can be complied by the supplier post filing of my return. In my opinion, unless until 16(2)(b) was there, 2BA. So 16(2)AA also can be complied by my taxpayer post filing of the return, because the condition is that it should be satisfied. So since 16(2)(c) is allowed to be satisfied post filing of the return, so unless until 16(2)BA was there, in my opinion, 16(2)AA also can be satisfied post filing of my return.
Anyway, 16.2D will only happen at the supplier's month end.
No, 16(2)AA and 16(2)C. 16(2)D is for me. It is not
for me.
supplier.
No, I mean that it is not something that has to be done prior to 11th at any stage,
yes,
because
yes.
something that is as good as A or B is in D,
Yes.
which always happens in the next month only.
Yes.
And also, they were discussing about in the GST Council about, grading of suppliers, right? Taxpayers, whether that has, till now it has not been implemented. Unless and until they do it, how will, if I want to buy something without knowing the grading, this functions, is it justifies whatever in that Section 38, once if they operationalize it through GSTN?
Grading per se is in a flawed concept as per me, because grading mechanisms will only be available based on the data that is available in the portal. In many cases, we find that fake ITC cases, the data that is available and presented are perfect. They would have perfect compliance, everything will be ticked, everything will be matched. And it's only when an investigation or audit happens that we find out that everything was bogus. So grading mechanisms based on only numerical factors per se starts off on a wrong foot.
And that can be challenged very well on the day one when grading starts. And the person can very well challenge that how my grade is that supposedly I am a genuine dealer, but still department prefers to create a case against me for a fake ITC. So I would say that I am against that order before the appellate authority. How can that order affect my grading?
Yes. And also, as you said, sir, previously, when they've given so many restrictions and such restrictions are not appearing in IMS initially, then it is in favor of the recipient only to put the blame or a burden on the department, as the IMS was generated by the system and the ITC is availed based on the IMS. So again, this condition cannot be subsequently applied based on the review of the books of accounts of the supplier. I think this will give a good ground for the recipient to defend his case.
Yes, ma'am.
But this is precisely, I think, an answer to the NGPT cases in Maharashtra, where even if it is there in 2B, subsequently the flagging as NGPT by the data administrating officer there will cause show cause notices to appear randomly.
So they are randomly appearing for the entire country, not only for Maharashtra.
No, but the term NGPT, I think, was coined there.
That has come from Maharashtra only.
Sir, if we see all these conditions have not been prescribed, so if it will get prescribed is the one of the questions, sir. Will they be able to identify and give the prescription, and the system or the GST portal will be made to that extent that IMS will give all these remarks?
And that is the real reason that even after 3 years, Section 38(2) has not been implemented. Now it was 1st of October 2022 when they were notified to come in notified, and it's now approaching 1st of October 2025. So only 2B has been implemented. The rest of the conditions are still yet to be implemented. But it would be a challenge that how it would be incorporated into the portal. Like the 1% issue which has been raised, that whether my 1% would be disallowed because it is only 1% tax which has not been paid properly. Rest of the 99% still paid. And upon that also, even if 1% has been paid in cash, has been paid through credit, not through cash. But at that time also the tax stands deposited. It is not that tax is yet to be paid. The tax stands deposited.
Agreed, sir. If I come to that question, sir, there will be a problem how the notice will be issued to the supplier. So
Yes.
1% ITC will be made ineligible for him because he had paid through ITC. So
Yes.
that is not correct. So he'll be asked to pay in cash 1%. So what happens that 1% which is paid in ITC, will they are going to give it back because anyways time limit would have been lapsed, or it is treated as a ineligible ITC for him? Means whatever he has paid. So if we go for that condition also, there is no clarity where what they're going to do the input tax credit which I've used for making the payment of that 1%. If I agree to pay in cash after issue of notice.
Very correct, ma'am. Venuji, it's 10 o'clock.
Who is it?
Yes, madam, can we complete?
Yes, sir. I had 2 more slides on the IMS. I think IMS is, as of now, it is raw. As of now, as you have, many might have seen it. So where the IMS is there, they are going to give us 3 options. Initially, the addition option was there from the initial period, and even the addition option, adding of an invoice by the recipient is discussed in many of the council meetings. That has not been prescribed in IMS also. The only options what I have is accept, reject, or keep it pending. Only these 3 actions can be taken by the recipient, not anything else. So if I keep it in pending, so till the time limit prescribed under 16 subsection 4, it will be in pending. After that, it will be removed if I'm not going to accept or reject those invoices. So these are all the things which are coming up from the FAQ, which has been provided by the CBIC. So if we see the FAQ, there are too many other things. What happens if I by mistakenly reject it? So these scenarios have been covered, but practically it is difficult. For example, if I reject it now and again I have to ask the supplier to upload once again. So how these things are going to take practically, even I'm not aware of it. Because if I see the credit note, I think one more advisory was given, issued by the CBIC, wherein they said, if you by mistakenly reject any credit note, you ask your supplier to re-upload it or amend it in GSTR 1A, or in the subsequent month GSTR 1, he has to once again upload those invoices under amendments columns. So whether it will increase the tax liability, it was clarified that no, for supplier, the tax liability will not be increased, because they said only the delta values will be taken, not the tax payable out of it. So there are practically a lot of things. As of now, what I am doing is like, wherever it is my invoices deemed to be accepted, I'm not taking any actions. Wherever it is not my invoices, or wherever there is a error from the supplier side while uploading the details, like arithmetical error or anything else, so I'm just rejecting it and intimating them to rectify it in the 1A or in subsequent GSTR 1. So only to this extent I am following when wherever the complaints have been handled by me. And I request anybody else who has I think everybody will be following this IMS. So anything else which is there can be added. Sir? Unni sir, you wanted to add anything? Okay.
Thank you, madam. And somehow I strongly believe that even Section 38 will undergo a change, and a new section would come. Thank you for taking your time, and request RPG to conclude the session for the day.
Thank you, Aniji, and thank you, ma'am, for the enlightening session on Section 38. And as you rightly pointed out, that most of the sections are yet to be, the mechanism for most of the sections are yet to be brought in place, because at many places in Section 38 we can we can see that it uses the term prescribed, as may prescribed, and even after 3 years these are yet to be prescribed. And IMS, which is somewhat we can say an implementation mechanism, Section 38. This itself is a challenge in itself, and yet to be yet to be given a legal framework for implementation IMS, which you can feel that it will soon come in the next 2 GST Council meeting, which are to happen in September. But until now, Section 38 only has a limited applicability, and you have very well covered all the aspects of Section 38, including the implementation and what are the various issues associated with it. And the audiences has also raised regarding the implementation of Section 38 that it is ultra vires Article 14, and it would be denying credit on an assumption basis, which will be lacking sufficient legal framework. So thank you very much for an enlightening session, and as always, SMS is breaking new barriers and reaching to new levels courtesy as speakers on various sections. So thank you very much to you and all the participants also for attending and making this a lively session. Thank you once again.
Thank you, sir. And I would like to thank you, Venu sir, for giving me this opportunity to present. Thank you, sir.
And to all the participants, that we are ready to give these opportunities, provided once anyone who comes forward and participate as a speaker.
That's nice, sir. Thank you, sir.
Thank you.